Welcome, everyone, to another episode of Frank Finance, where you can get your honest financial information and your questions answered. Today's discussion is going to be talking about credit cards, how that might impact your credit score, and ultimately, any recommendations that I have for you. All right, as seen before, I'm going to go through a presentation deck on credit cards and why is getting one important. But before we do, please like, subscribe, and comment below if you enjoy the content, as well as let me know if there's something you want me to make a video on. This is a viewer's request. All right, why get a credit card? Well, first and foremost, when you swipe your credit card, cash isn't out the door right there and then. So, for instance, let's say you're at Target this holiday season getting some sweet Black Friday deals, and then you find out a week later that their information was breached. Oh no! What are we going to do? Oh, that's right. It's just a credit card. Your card will get frozen, they'll dispute it, and send you a new one with new numbers so that this doesn't become an issue in the future. Well, during that time frame while you wait to get a new card, you obviously can't use a credit card, but if you were using your ATM and check card from your bank, think about that. You would lose access to your ATMs. You would lose access to purchasing things. You would have to walk into the bank and ask them to hand you cash. And who does that in 2020? I mean, this year is an exception, right? But please, for that reason, get a credit card. Point number 2 is talking about credit score. When you open up a credit card, it will help your credit score over the long haul, especially if you're diligent about it. If there's one thing that you get out of this entire video, please, if you haven't done so, open a credit card. We will talk about some recommendations towards the end about it because it is the one simple thing that's going to help you get your own auto loan someday, your own home mortgage someday, and credit score does impact whether or not you get the apartment that you really want. So, with that being said, the other final perk that I would like to mention is that credit cards come with cash back, travel points, or some type of bonus when you sign up that you should keep in mind. So every time you swipe your ATM and check card, you're not getting anything for the most part. Some banks have switched over and started doing that, but for the most part, you get nothing. So, all right, let's talk about credit score. Credit score. What's your credit score? Well, it's ultimately a score that lenders use to determine credit worthiness. It ranges from 500 to 850, with the average being about 700, very good being about 750, and excellent being above 780. Now, falling into those buckets, the goal is to ultimately get into the 750 or higher and even 780 to get favorable mortgage rates on your house, favorable rates on your car loans, or any personal loans that you might need to take out. So what I have in front of you is a pie chart on the left and some discussion points on the right. The pie chart on the left is really trying to show you that there's really 3 big things that ultimately determine your credit score. And on the right is to talk about how do you get into that bucketing that is desired. So let's start with this in no particular order, just starting on the top here. So on-time payments. So for instance, if you make your payment every time, obviously you fall into the excellent bucket. There's nothing better than that. But if you miss one payment in a year, 1/12 of your payments now are considered late, which means you ultimately already are sitting in the average bucket. So the only way that that's going to get better is with time. And this is a significant portion of your credit score. So if you have one late payment, what I would highly recommend is always pay the minimum payment. Then figure out the rest. Don't worry about the interest. This is very important that you make the minimum payment. Second, credit history. Now this would come into handy with the on-time payment because the longer you have the history, the easier it is to stay in that good or excellent bucket. And so for credit history, there's 2 things I want to point out with this one because I've been on both sides of it. When you open up a card, let's say you open up one that you co-sign with your parents, and you no longer want that. When you close that out, you lose your credit history, which is why some of the recommendations that I'm going to make after this slide here are very important for you to consider because the longevity of a credit card, you never want to close one once you open it. It is very important that you keep it open because as soon as that card closes, you lose your credit history on that card. So With that being said, how do you fall into the excellent bucket? 25 plus years. Now, you're probably saying, where am I getting these stats from? Just as an FYI, most of these stats are coming from the 2 credit cards that I use daily, and I use through their credit app online to actually figure out how they consider the bucketing of each one of these things. So, with that being said, I just fell into the good category from 8 to 24 years. And I can tell you my credit score, this was the first time it went from 750 to about 770. It was a huge jump in how I got started getting up to the upper 700s. And so keep that in mind. All right, so the final bucket here is utilization. So what is utilization? It is how much of your available balance that you are given do you keep every single month. So if you pay off your balance 100%, utilization is 0. That's great. If you've got a $10,000 balance and you put $5,000 on it and you only make the minimum payments, you're going to be at about 50% utilization. Now, I'm going to show you in a second that utilization is only temporary and it should not be something to, flip a desk over about, because I use credit cards to ultimately buy and pay for my wedding. Now, with that being said, it took a hit on my credit score until we paid it off. But as soon as we paid it off, it instantly skyrocketed. So I fell into the average bucket. And mind you, I had a high 700 credit score, nearly 790. And so I'm going to show you here what I mean by that. So on this second slide here, how does utilization impact your score? You can see in January of 2020, I was at 700, and I'm used to being at 790 plus. And so you can see January, February, March, we finally paid off the entire wedding debt that we had in March. And you can see my credit score actually went back up to 795. So it's only temporary. It's not something that you should consider over the long haul. So just jumping back to this, one final thing is, what is the other 2 smaller items? It's really the mix and the inquiries that you have. So if you keep open credit cards up over and over and over again, the amount of queries that you have on your credit will actually push down your score, especially if you're having hard credit inquiries. So soft and credit inquiries, like when you open a bank or things like that, will not impact your credit score. Hard credit inquiries will. So if you're about to have someone and give them information, maybe ask them, is it going to be hard inquiry or a soft inquiry? It's pretty important to know, but it is a small portion of your credit score. All right, what's my recommendation? Because I said that you should go sign up with cards. I've got 2 buckets to think about. Are you a starter? So is it your first time cards? Or do you have established credit? 4 things that I'd like to talk through in each one of these buckets for comparison purposes is to talk about, do they have annual fees? What is the APR on their cards? The annual percentage rate, for those that don't know what that means. The bonus, if you sign up, what do you get off the bat? And then what is the cash back rate that you're getting each month or particular categories? So from a starter bucket, the 2 that I would recommend based on friends, family, or personally gone through this is the Capital One Journey and the Discover Student Card. These 2 both have 0 annual fees. They both do have pretty high APRs, but this is ultimately because you're a starter. Mind you, if you pay your balance off right away, this is nothing to get alarmed by. And if you don't, remind you, this is over the course of a year, so if 1 month you can't pay it, it's not the end of the world. And I did talk through in a debt video prior about credit cards and how to think about the interest with that. So if you would like to go back, I'll put the link below to watch that video. And then from a bonus perspective, the Discover Student actually gives you 0% APR for the first 6 months. So if you put a balance on, like I was talking about, with like a wedding or maybe a large purchase and you're diligent about it, you could pay it over 6 months and not have as large of a cash flow hit in month 1. And then from a cash back standpoint, both of these have unique categories to think about. So they both average 1% on all purchases, which is great. the Capital One Journey, if you pay off your balance, you get 1.25% back, so you get a little bit back when you pay off the balance as a kind of an incentive. And then from a Discover side of things, there's actually a cash calendar that gives 5% back on those items that are inside of that cash calendar. So both cards, excellent cards. Family members, friends have used both, started off and built their credit score up from 700 to 750 by using these cards. Now, if you're a little bit more established and maybe you've already got a card, these are two that I personally use right now, so I'm a little biased on it. I've had more than just these credit cards, and what I will say is the reason why I am selecting these two is first and foremost, I've gone through fraud and I've had to have cards reissued. I've been stuck on a travel for business where I needed the card expedited and shipped overnight so that I could use it while I was working in another state. And so I've experienced the downsides of things that can happen with credit cards, and both the Chase and Capital One has come through in flying colors, and I would highly recommend them over and over and over again. So let's talk about these two. Again, every one of these cards have bump ups where you can pay an annual fee and you get a little bit more steep of cash back and things of that nature. I'm just going to talk about the ones that have zero annual fees. So the Savor one and the Freedom. So let's look at their APRs. As you're a little bit more experienced, you're going to notice that your percentages are much lower from an APR standpoint. And here's where the sweet, sweet cash bonuses come into play. So for both of these, they're going to offer you $200 if you spend $500 in the first 3 months. So there are a lot of other sweet bonuses out there to pay attention to. But also the second big bonus here is that there's 0% for 15 months. So the Chase Freedom is the card that I used to fund our wedding off the bat. So I put all the money on that card and I paid it over 15 months. It's easier to take big cash hits over a long period of time versus actually having to pay it all up front. And then from a cashback standpoint, the thing with the Capital One Savor is that it's 3% dining, 2% groceries, and 1% all other. Chase Freedom recently, actually very recently this year, bumped up their cash back. It used to be only 1.5% cash back. Now they actually added 5% back for travel. First 12 months you get 5% on groceries. Otherwise it's always 3% dining, 3% groceries. And so Chase has been trying to take market share and have had sweet promotions not only on their credit cards but also on their bank accounts, which I'm going to do bank churning in another video. It's a sweet way to make cash, as just a heads up. And so ultimately, if I were to have a recommendation, I love Capital One for the use. I love Chase for the bonuses. The one big thing that's different here is Capital One is instantly, basically the points are put into your account. Chase is put in towards the end of the month, and so you have to wait for the cash back to be put in there. Ultimately, all of these cards offer the ability for you to look at your credit score, fraud protection, and the whole 9 yards that you would want to think about having. So if I were to recommend a card, it would be the Chase Freedom. And I'm not just being biased to this one, but I do have a referral link below, being completely honest with you. If you open it, great. If you don't, that's fine. If you go through your own website, that's great. It's a good way to support the channel if you want to open up a brand new credit card. So keep all that in mind. And hopefully today helped you understand why credit cards are important, how they impact your credit score, and why I would recommend opening one today if you haven't. And I've gave you a list of recommendations on what to open. So as always, if you enjoyed it, like, subscribe, and comment. If there's things you want to learn more about, please ask. If there's other things that you want me to make videos about, please comment. Have a good day. Bye now.